Good morning, everybody. Welcome to the pre-market rundown for April 5th, 2023. This is our daily show where we go over all the news, notes, and most importantly, the mindset necessary to keeping you consistently profitable here across these crazy markets. I'm your host, Adam Holland, stock options expert, as well as expert market strategist, and we are ready to dive into another great day in markets. Let's see what we got going on here. As you guys know, go ahead, take this first second as people make their way in here to post our session on the Instagram story so everyone knows where to find us, how to tune in, etc., etc. It's also in the link tree. Make sure you guys are also just checking the link tree that is in the link in bio on my Instagram as well. I upload a number of resources there, so you can find some nice little nuggets if you go poking around. But let's see, we're going to go in here and post this session to my Instagram story. In the meantime, I hope everybody had a nice, pleasant morning. Got after it this morning, right? Got a little bit active. And, they're just ready to execute. Again, super, super important to get in that mindset of execution before you get into markets. If you roll over out of bed and you think you're going to go kill it in markets, you won't, right? Because your mindset is the lens through which you perceive opportunity. So if you're still rubbing the crust out of your eyes, you're going to struggle in markets. That's why it's important to get up, execute. So you're in that mode of execution already by the time that opening bell rings. So let's see here, just posting this on the story and then we can get to it. As always, we're looking at 1% better here by the end of each session. So make sure that you're throwing that 1 in the chat, signifying your intention to be 1% better by the end of this session. We don't set the bar super high. That way you don't feel like you're never achieving anything. If you go to sleep 1% better than you woke up, you had a successful day, right? So that's what we're looking to do here. So I'll throw this on the story. Let's see here. Below for this morning's pre-market rundown. Awesome. Okay, got that all locked and loaded, ready to go. Cool. Just got to throw the link in here as well. Paste. Okay, cool. There we go. Now we are rocking and rolling. Awesome. So let's dive into what we got going on this morning. Yes, great to see all you guys here. Investing in yourself is always going to net the biggest return. So that needs to be the first move that you do each and every day, right? If you're looking to get something out of markets, we had a very successful day in markets yesterday, executing both ways, right? Both directions. We had over 100% returns on trades yesterday in both directions, right? I think that's a special community, right? Where you go in, and it's not the first time we've done that. It's not the last time that we'll do that. But I think it's, again, important to underscore the fact that that isn't normal, right? We're part of an amazing community who's executing and making moves with precision. And I think that that's huge to underscore. Because there are a lot of, different environments out there, and not all of them are great ones. And it's not to say that we always get it right? Nobody's going to get it right 100% of the time, but it is nice to get it right, the majority of the time we are positioned in the correct spot. And that's where we've been, really for the last number of weeks. And it's a great spot to be. So we want to look to continue that and continue to execute, right? As well as operate in patience, PAYTIENCE. Now, in terms of our top story here, Legal Shield, Johnson & Johnson, ticker J&J, unit LTL Management, which was created to file for bankruptcy as a way to handle lawsuits related to its talc baby powder, refiled for Chapter 11 bankruptcy protection after its first attempt was thwarted. LTL also offered to pay $8.9 billion over 25 years to resolve all current and future talc claims, higher than the $2 billion offer in its first bankruptcy filing in 2021. J&J, which has support from over 60,000 claimants for the latest offer, clarified that the second bankruptcy filing is not an admission of guilt, and it stands behind the safety of its talc products. Resolving this matter through the proposed reorganization plan allows claimants to be compensated in a timely manner. said J&J Worldwide Vice President of Litigation Eric Haas. So basically, it looks like J&J created a certain unit called LTL Management that was created to take the bullet for Johnson and Johnson. So it's pretty much a way for them to handle lawsuits about their baby powder. I don't know if you guys have heard that, but there are a ton of lawsuits about Johnson and Johnson baby powder causing cancer. And they have been kind of in and out of this legal battle for years. So this is kind of just the newest iteration or update on that legal battle. In terms of background, J&J is facing multiple lawsuits over allegations that his baby powder products contain asbestos, which is known to cause various cancers. The company has maintained that its products are safe and has denied wrongdoing. However, to shield itself from mounting lawsuits, J&J created LTL exclusively to declare bankruptcy as a way to resolve the litigation. Note that J&J will discontinue talc-based baby powder products globally this year and switch to an all cornstarch-based baby powder portfolio. So let's see here. Yeah, that's pretty much it in terms of like this J&J situation. They go on talking about more Seeking Alpha commentary here from Mark Rusin, investing group leader of iREIT on Alpha. He believes that the lawsuits have added opportunity for long-term investors. The lawsuits could cost J&J billions, but it is a money printing machine with strong cash flows, making any large settlement something the company can handle, he said. However, Seeking Alpha contributor Hunting Alpha thinks the talc liabilities, which could be as large as 3 years of cash flow, is a major overhang on the stock. So I feel like they love intermingling this Seeking Alpha commentary and throwing out the fact that there are people, talking on their website in order to get more people talking on their website. But again, as we break these down for you guys, for my people who might be new, or you might be, still kind of ingratiating yourself into the world of ingratiating, don't want to slur that word, right? Ingratiating yourself into the world of markets. I think it's important to recognize that like these people that they point out are just like contributors. So basically, like if you or I wanted to hop on and share our opinion, that's what these people are, right? So just take everything with a grain of salt. Don't look at it and say, oh my gosh, like this investing group leader of this, like don't take that word as bond. These are all people's opinions, and you need to take them as such, right? Again, making sure that you have the correct mindset so that you're sifting through information, in a timely manner, but also in an effective manner, and you're not just kind of taking every bit of opinion that's shared as law. Now, our next segment here, rates to top 5%. Cleveland Federal Reserve Bank President Loretta Mester is sticking with expectations of rates topping 5% to curb inflation, even after recent banking instability. So we talked about at the end of our session yesterday about how, we had a member of the Fed, Mester, speaking yesterday evening. And this is, kind of a recap of what was said. Quote, in my modal projection to put inflation on a sustained downward projection to 2% and to keep inflation expectations anchored, monetary policy moves somewhat further into restrictive territory this year, with the Fed funds rate moving above 5% and the real Fed funds rate staying in positive territory for some time, she said. Precisely how much higher the Fed or funds rate will need to go from here and for how long policy will need to remain restrictive will depend on how much inflation and inflation expectations are moving down. So Rita Morwa, investing group leader of high dividend opportunities, is of the view that a soft landing is still possible, as recent data does not suggest the need for an enormous amount of additional tightening. So everybody just kind of throwing in their hat again, tossing in their opinion about what they feel about, kind of how high interest rates are going to go. It's all data dependent, right? At the end of the day, this all falls on data. So we have to continue to look at what PCE inflation data we get, because again, PCE is the Fed's preferred measure of inflation. So it's just continuing to look at the data and saying, okay, the Fed is going to move according to that. Everybody can throw out their bets in regard to what they expect the Fed to do. Jerome Powell came out and said that given this banking turmoil, that will likely lead to some tightening in credit conditions, basically not giving credit out to everybody, and banks not funding things and spending money willy-nilly because of this situation with the banks failing. He thinks that will do part of their job so that they might not have to kind of raise rates as much as they originally thought. But that's all going to continue to be data dependent. Like, does the crackdown on banks happen, or do banks start cracking down? in a way that, keeps inflation down in the near term, or does that not happen, right? So at the end of the day, this is kind of just, you file this under, continue to watch the data and see. But in terms of, Messer, she's a member of the Fed, so she does have, an inside look, but they all have different opinions and they come together to make decisions. So, we'll get more information as we lead up to their next decision regarding what we'll expect out of, interest rates to continue this year. But at the end of the day, Powell says that they are, kind of committed to, the fight against inflation and all that good stuff. So we just got to continue to take the information as it comes. But, that's just one member of the Fed saying that, hey, they think that we're going to have to continue to raise rates and do so for some time. As of right now, the precedent is that they're not going to cut rates at all in 2023. We'll see, right, if that ends up remaining the same. If you remember, they weren't going to start raising rates at all in 2022. And then it became December of 2022, and then June, and then March, right? So just because the Fed is saying something now does not mean they'll continue to say the same thing, as this whole interest rate saga demonstrated to us from the beginning, right? Now, cloud duopoly, our next headline. The UK's communications regulator recommended an in-depth probe into the country's cloud market, as hyperscalers Amazon and Microsoft have cornered the lion's share of the market, thereby limiting the competition. High levels of profitability for AWS and substantial consistent growth in Microsoft's profits indicate there are limits to overall competition, said the Office of Communications. We're concerned that constraints on customers' ability to use more than one provider can make it harder for small cloud providers to win business. It cited egress fees, restrictions on interoperability, and committed spend discounts as barriers to competition. Ofcom called the Competition and Markets Authority to investigate the nature and extent of these barriers. Meanwhile, Seeking Alpha contributor Junius believes Microsoft is the better cloud play compared to Amazon, giving wide margins and resilient enterprise demand. So all it is pretty much, people, cloud computing is going to, power the future, right? When we talk about decentralization, we talk about work from home, we talk about AI, right? All this data, all these things being produced. All that stuff is stored in the cloud, right? All of it is stored in the cloud. So cloud is huge, right? It's one of those secularly uptrending sectors where we will continue to need that, right? Cybersecurity, cloud computing, semiconductors, right? Electric, vehicle technology and overall electrification technology. All of that is secularly uptrending. What does that mean? That means going up over the course of the long term, right? So cloud, one of those sectors, is going to go up over the course of the long term. But as always, people are scared of monopolies or duopolies, where you've got a few big players and they can put the squeeze on the whole market, right? Because they set the market, they set the tone, they are the big players. So right now, the UK, I guess is kind of looking, and Europe has been a lot stronger, or I guess harsher maybe, on antitrust things than the US. Under the Biden administration, the US has been a little bit harsher on these big companies and making acquisitions. But the UK, and the rest of Europe really cracks down, probably because these are American tech companies and not their tech companies. But like with Apple's charger and all that, how they made them switch the charger, like it's just, things where they're not dealing with the whole stranglehold, on certain products like the US is fine with. So they're like, look, don't bring that stuff over the pond. Keep your whole monopoly thing to yourself. But we need, we need competition here. Now, in terms of Bank of America's top 10 stocks, Netflix has outperformed the broader market handily this year, up more than 17%. Netflix played us last week, and headed into this week as well. But bulls can remain confident as its password crackdown leads to more signups, according to Bank of America. Netflix is among the top 10 best ideas of B of A's Alpha Generation research team, which they identified for Q2. Its list features 8 buys and 2 underperforms. So again, I think we got a slow news week this week, as we're kind of including like really just little tiny bits and pieces of information that don't seem to truly matter. I don't really care who Bank of America represents or presents as their top 10 stocks. At the end of the day, what matters is what the charts say, and then what we are understanding in terms of that battle that's going on between buyers and sellers. So at the end of the day, I don't believe that anybody at Bank of America is smarter than we are, right? I don't believe that anybody at Bank of America has any amazing insider information, because there are plenty of banks that went ahead and recommend Silicon Valley Bank as a buy, and they recommended this and they recommended that. and it's now all in the tank. So at the end of the day, you need to be able to evaluate for yourself, right? Put a 7 in the chat if you know that to be true. You need to be able to evaluate for yourself, because at the end of the day, if you subject yourself and your movements to someone else's opinion, you can't be mad at anyone else but yourself because you decided to believe in that person, right? So Bank of America can say whatever they want. At the end of the day, what are they going to do? They're going to act in their own best interest, right? They're going to say whatever is in their best interest. They're going to do that, right? So make sure that you are, taking that in whenever you take in information, and just make sure you're taking it with a grain of salt and you can back it up yourself. If they're right, awesome. You can back that up with what you see in the charts, but otherwise you're not just taking it kind of, at face value. Now, in terms of today's markets, let's see if we're in roughly the same spot. Yeah, it looks like we're probably around the same spot as when this opened, maybe down roughly 0.2%. Not down a whole lot, but we are down, which again, not shocking based off of yesterday's action. But in terms of today's markets in Asia, Japan, we're down 1.7%. Hong Kong, we're down 0.7%. China, we're up 0.5%. India, up a full percent. So mixed bag there. The FTSE in London up 0.4%, Paris down 0.2%, Frankfurt down 0.3%, the Dow down 0.1%, S&P down 0.1%, NASDAQ down 0.1%. So down a little bit / basically flat, might be 0.2 now. Crude down 0.2%, gold flat, Bitcoin up 0.5% to $28,507. In terms of today's economic calendar, we got the ADP jobs report at 8:15. That might be the only thing that really impacts us here. In terms of like volatility, right, in data that could cause any type of registerable movement for markets. And we're going to wrap up here with our rapid fire bullet point rundown. So Bank of England clears UBS's $3.25 billion takeover of Credit Suisse in the UK. JP Morgan, ticker JPM CEO Jamie Dimon says repercussions from bank failures will last for years. SEC charges founder of Frank for misleading JP Morgan in takeover deal. No idea what Frank is, but I guess whatever company Frank is, they had the founders swindle JP Morgan into taking over. So again, trusting these big banks, Bank of America, JPM, I don't know. Seems like they get swindled all the time. C3.ai, ticker AI, shares drop after short seller warns auditor on alleged accounting issues. Again, further underscoring the fact that it's so important to do your own research. Everyone was investing in every type of ticker that had AI in it or company that was related to AI, right? So they're like, oh, this ticker is literally AI. Like AI is blowing up. I need to get shares of this, right? But you see here, they might be having issues with accounting fraud, so make sure you do investigations into these companies, right? These companies seem sound. You know what they do. You don't just see, okay, their ticker is a buzzword, so let me get involved, right? You had, a bank that had a name similar to one of the banks that crashed, and their shares were plummeting also. And they're like trying so hard not to be associated. They're like, guys, we're not the bank that's plummeting. We're not the bank that's plummeting. So again, markets, when you look at a stock, that is not like a quantitative value of that company, right? That's not saying, hey, we evaluated this company and this is how much it's worth. It is just a representation of the sentiment around that company, right? Because you could have a stock that tanks. Why? Because people don't spell check and they just see the name and the name is associated, right? That bank is no less valuable than it was previously, right? But people are what drive markets. So again, very important to always understand that, right? People and the sentiment around companies is what drives, their stock. It's not saying, oh, this company is like wholeheartedly worth less now than it was yesterday. It's just a mix up. Now, California grid needs $9.3 billion in upgrades to support shift to renewable energy. ExxonMobil, ticker XOM, expects lower Q1 profit as oil and gas prices cooled off. FedEx, ticker FDX, set to outline plans for billions of dollars in cost savings today. UK privacy regulator fines TikTok $16 million for failing to protect children's data. SPAC Digital World, ticker DWAC, drops after Trump's arraignment. Delayed 10K filing. That's typically how it goes with DWAC. It's really just kind of a meme stock at this point. It's Trump's SPAC, right, for his Truth Social network. But overall, it tends to run on rumor, and then when the news happens, it drops. So if anybody's out here placing speculative trades on DWAC, whenever there's a rumor of something related to Trump happening, it runs. As soon as that thing is confirmed, it drops literally every single time. So just a heads up. Pfizer, ticker PFE, And BioNTech, ticker BNTX, sued by Arbutus over COVID-19 vaccine patents. So that'll wrap us up here today for our session on what is that, April 5th, 2023. There was a lot of news, right? A lot of news, but none of it that was too kind of all over the place. None of it that was too crazy, which is great because that just leaves us to worry about the technicals, which is the most important point, right? Worrying about the technicals, what the charts are telling us, how that battle is going on between buyers and sellers, and then us making educated decisions based off of that. So we had an amazing day yesterday, right? We've had a great couple of weeks. Make sure that you're out here executing, remaining patient, but at least, right, looking to get 1% better per day. As always, if you got even one valuable morsel of information from this session, all I ask that you show love to the accounts, right? You see the YouTube shorts, like, throw a comment. The Instagram reels, like, save, throw a comment, send them to somebody, right? This is information that is immediately making us money, right? When we talk about the channel has made us a tremendous amount of money over the past 2 weeks, right? Back to back. So these pieces of information that are dropped via the reels, make sure you're going back, watching the reels yourself, right? Showing them love, because even as people who have taken the course, right, gone through all that good stuff, I'm still dropping new information, right? That's the amazing part of being part of this community, is that you never have a lack of information, and a lot of it is coming for free, just like this session where I come to you guys each and every day to help get you right before markets. But other than that, everybody, right, throw a 3 in the chat if you're ready to execute today, if you're ready to execute either in learning or in trading. It might be paper trading, it might be real trading, but make sure that you let everyone know, hey, I'm here, I'm ready to execute, I'm going to put my best foot forward. And that way, when it's time to start ripping and running in markets, you already have that trigger finger ready, right? So I appreciate you guys for popping in, investing in yourselves. Have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market rundown. Have a good one.